Well, folks, we talk about a lot of different theories on this show, not only about the markets, but in life. You ever heard of the giant foot theory? When you're walking along the street, everything's going great, and a giant foot comes on and stops you. Well, that's the Moody's downgrade of the market. The question is, will we buy the dip? We got a lot of news to cover. We got a major downgrade to cover. We got stocks to cover. We got the TLT to cover. And you guys also, we got some stuff to talk about with PMP. Tommy Lackey, 835. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's run it down. S&P's down nearly 60 handles at 59.18. But you know what? We're off the low. The buy the dipper is already out there. The Buck's down 86 cents on the Moody's downgrade at 10008. TLT getting hammered here, down $1.19 at 85.20. USO flat right around 68. Flight to quality and gold up 376, 298. SLV climbing back up 18 cents at 29.48. And Bitcoin futures pulling back with the market down $1,125. All right, we got to bring in Triple D here, and we have to give the explanation for my attire. And the explanation is that we've been talking to some major sponsors, and one of the stipulations is that we have to go to suits. We have to go to suits and ties. So I thought that I would just try it out today, see how it
I haven't
looks.
tried it out yet.
Yeah. So we're going to the suits, guys. I'm sorry, PMP. We're falling to the suits.
I'm still staying hoodie, so I'm sitting here. It was an interesting weekend, rough weekend for Canadian hockey. Both the Jets and the Leafs are gone. Huge loss. The Leafs always lose in Game 7. They did not disappoint, losing again in Game 7. Or they did disappoint, which is what I mean. Rough weekend for the markets too. It started very early Friday night, and it was just after the close. And the stocks had a pretty strong end of the week. We talked about potentially, speculation. Maybe there's some deals coming next week. Maybe Monday we'll hear some deals or early next week. And then something happened, which I don't think was on anybody's radar. Moody's downgrades US from AAA down to what, AA plus or whatever the hell it is, these ratings. But anyways, the first downgrade of the US in, I don't know how long, 14 years, somebody else was saying. I'm not sure. I think it was S&P that had done it before. I don't know if Moody's has ever done it. So that is why the markets just started getting hammered. And if we show, Joel, and I don't know what you're showing here right now.
I'm just showing the projected debt for 2029 would exceed the 1946 record high of 106%. So
I mean, this is what they're looking at now. I mean, you could have did this 10 years ago. So
I know.
Like now we're worrying about it all of a sudden when we went from 15 trillion to 36 trillion dollars in debt. Continues to go. Yeah, the debt's a problem, Moody's. Thanks. But they harpoon the stocks. So the stock's like, oh my gosh, U.S. credit is getting downgraded. It's kaplooey to all these tech stocks. Buy the dip has emerged, though. Not crazy buy the dip, but a little bit. We're off the overnight lows. That's the good news. The bad news is the TLT is absolutely hammered.
Murdered.
We've been talking about this being the boogeyman in the room for a long time. And the TLT is perilously, I use that word intentionally, perilously close to making new lows. If it is not, it actually is. It actually is. So new 2025 lows, we're getting back to where we were in October of 2023. That has major repercussions across the board for a number of reasons. Those reasons I can just start and list them off. One is as yields on bonds go higher, especially government bonds, they become more attractive to stocks. We're talking about the 30-year over 5% again. We said that could be a problem.
Not
30 years
good.
starts looking, that's a number that everybody talks about. That's a problem. Obviously, you're concerned when you get, the downgrade is the whole debt situation, but that's been a problem for a very long time. The TLT also, when you see long-term rates going higher, it raises the cost of borrowing for corporations. That's not good for the stock market either. Which brings me to, such an interesting morning because they're hammering tech and they're actually buying some defensive names. They're buying consumer staples. They're buying healthcare. They're buying some other stuff. That's what they do on these days that we're down. But this is not a normal day, folks.
Hey, Dennis, I just want to interject. The TLT is at its lowest level. You're not going to like this. Since August of 2006.
I think we went a little bit lower in 2023. Just blipped a little bit lower there, but it gives you a good feeling,
Yeah,
a good.
you know what? I can't ever argue with this. It must be this tie choking my brain here. You're right. We went to 82.42, and that Ackman came in. You're right.
Yeah, the Ackman bottom.
Yep.
So we're getting back down here. That's why I said it's interesting is that they're buying staples today, they're buying drugs, but I mean those usually are more impacted by the TLT than anything. The TLT is down substantially here this morning, which we can see. Yet XLP going higher or trying to go higher. Coke, Pepsi, Procter & Gamble, all going higher here. I don't know if that holds because I know those stocks are usually positively correlated with the TLT because as rates go higher, those definitely become less attractive. I mean, you're in Coke for the dividend, a lot of people. There's not a lot of growth. You're in Pepsi for the dividend. You're in a lot of these things for the dividend. Those dividends are less attractive today. So I would not be surprised if we actually start to roll over after the open on some of those consumer staples. So I wouldn't be hiding in staples and utilities today because I think they're going to fall. I think the TLT is going to win the day. I also would not be surprised if they buy the dip in tech because that's just what they do, and they're still speculating on more deals. So I'm looking for actually this trade this morning that we clearly see in the pre-market to potentially reverse in the regular session. That's how I'm approaching it. That's how I'm positioned right now. Whether that happens or not is to be determined.
Okay, yeah, tech getting hammered here. Also, and don't ask me to explain all the implications of the new budget package going through. It didn't pass. It passed. They're going to stay till August. Cutting taxes at this time, like I said, I'm not a political economist or anything like that, but that is also weighing on the market today. The new tax bills. So we can bring in your political tax bill experts, maybe Christian or somebody like that can come on and discuss that. But that is also weighing on the market. Let's go to catalysts, right? Every stock needs a catalyst. And when you're getting absolutely obliterated, and do we have anything on this? Do we have anything that is like
insider buys?
Well, no. I meant is the DOJ came out and said anything?
No, nothing. No.
Nothing.
The DOJ doesn't come out and say stuff. They're like doing their own thing. So they're not like going to go public and say, yeah. And, the Wall Street Journal article is true. So we don't know the repercussions of that. What we do know is UNH has, been hit just ridiculously hard and obviously hammered on that potential Wall Street Journal article with the DOJ investigation and, potential fraud. Is bouncing back and has almost filled the gap all the way back up. So that appears to have been a buy the deal or buy the dip opportunity here. We have a lot of insider buys from Friday night, and I can jump into those in a second here and just give you
big buys in UNH.
Decent sized buys, yeah. Like vote of confidence saying, hey, look, our stock is cheap and we believe in it. And, that's what this stock needed. And, it doesn't hurt that it's a defensive day as well. And UNH has always been seen as a defensive stock. But I'll just go through some of these, So it started actually during the day on Friday. Around noon, we had multiple directors buying small, 300 shares from John Noseworthy, 3,700 shares director from Kristen Gill, And then it continued to go 1,533 from Patrick Flynn. So, and then we also had, Timothy Flynn, I guess it is. So we had multiple buys, but then the big ones came Friday night. We had CEO Stephen Hemsley buying 689,000 shares.
That's a buy.
But again, that was, I don't know, that actually, I'm looking just in the filing there. That's a buy. Averaged 86,000 shares, it looks like, at $288. So some of those were acquired lower, probably because, he's CEO, but also some open market buys in there too. Also the CFO going into the open market and buying another 17,000 shares at 291. Those are big, big, big votes of confidence. So that's the good news. And you're seeing UNH pop here 4.6% substantially. Again, doesn't hurt that, they're flying out of tech and they're looking for another home. This is really beaten up. Is the low in? It all depends on the DOJ stuff, but it's looking more and more like that 248 may have actually been the blow-off capitulatory low. So the insiders think so. So huge vote of confidence here.
The complexion of the issue, UNH, it changed on Friday. I mean, you had a good 3 days to buy on weakness. But yesterday, and we talk about this, putting bids out those last 3 days, bam, bam, bam. You could have just gotten them. Now you're going into a rising market, still pretty good volume. I mean, let's just take things in the short term first here. And did we fill the gap? We did fill the first gap. That's interesting. I'll keep an eye on this 307.11. That filled the first gap. And you went to almost 310, and that was the prior day's low. So I think if the bulls really want to make a stand here, you got to get a sustained 310 bid, and then things open up. Your 4-day high is 342. But it's good. I mean, a vote of confidence back over 300.
Needed it.
There will be some phase in this stock today, folks. If you think it's just going straight back to 400, I don't, the only way you go back to 400 is if the DOJ just came out and said,
or they say we're in the clear, and then that could help. I mean, the stock is ridiculously oversold. It's a defensive name that went from 600 to $250. So probably should have been loaded up, just blindly buying the dip works, again, maybe here, but not if you're early. But, when it just got so far, and you're talking about UNH at 11 times earnings, which hasn't been that cheap relative to itself in years, it probably made some sense to put some in. The insider buys are there. Am I chasing it here? I don't chase anything. Would you buy dips? Maybe, but there's a lot of unknowns and there's a lot of risk here still too. So I just think there may be, better places for your money at, but again, money's looking for a home. Stock's cheap. People are believing that eventually there'll be a turnaround story here, and maybe they're going to be right.
It's a little bit. I mean, you don't want to get SMCI'd. I mean, because, and I don't even know if they've ever come out and officially, resolved things. But look how long it took. Like now that's accounting. That's a little bit this. This isn't. Who knows? It could be accounting related to the Medicare fraud, but a little bit different. But these things, just aren't that all quickly, resolved. So let's look at UNH. Cigna, how's Cigna's I don't know if that's an odd lot. That's traded down $2. I thought Cigna really held up well.
It has.
Yeah.
The other ones have all held up pretty well. Cigna's held up unbelievably. Humana's even held up pretty well. Humana had some insider buys too, I believe, on Friday night. So you have some votes of confidence coming into this sector. But it is pretty crazy when you think about like Humana, UNH, lots of similar overlapping businesses here, and Humana is like barely, down in the last month, and UNH has been 50% haircut. Probably UNH is at a point where maybe you're blindly thrown in your long-term portfolio on dips and just not looking at it for 10 years and maybe be okay. We're going to have that lecture later on today, buying good companies at reasonable valuations. UNH has been a great company for a long time. The valuation is very reasonable. Probably fits that bill.
And folks, the reason it's a twofold reason, because we're switching, we're switching to suits, but Dennis and I are also doing a presentation today, navigating long-term investments in a short-term trading world. I'm going to be in downtown Detroit at the Motor City Casino. I don't know if I'll go in there and roll any dice at all, but we're going to be doing that. And if you
We're
haven't,
actually going to be putting this on YouTube as well, so you can watch, I believe, live on YouTube. Are we going to be able
yeah,
to watch it live on YouTube? Yeah. So I'll tweet out the link. Maybe even in the pre-market prep we can put it out there. But it's going to be a great presentation. We're on from 10:30 to 11:30 today. So Joel
it,
live from
it,
downtown Detroit.
and if you think that Dennis is good at trading and speaking, you should see the way he puts a PowerPoint together. I
Ha!
mean,
I don't know if I'm that good at that, but I
they
try.
didn't have PowerPoint they barely had computers when I was in college. Actually, I can tell a quick story. The first time I did they did have computers in college. I think it was called Nubs. I don't know what it stood for, but I'm like, oh, I'm going to try and do a paper on this. And so I went to like the union and whatever. And that poor girl that was sitting next to me, I'm like, can you help me do this? Can you help me do this? Can you help me do this? And that was but Dennis, excellent PowerPoint presentation.
It's going to be fun.
Yep, it's going to be a lot of fun. Dennis, just going back to Friday, I know it's revisionist history. Did you get caught up in any of the cough trading action with Discovery? I mean, was there anything going on after? Was there any opportunity there, or did
Yeah. So you have the merger closed. DFS and COF officially closed Friday night. And obviously DFS is off the board today. We know that's why Coinbase has went into the S&P to replace DFS. So Discovery is gone. There was some opportunities. There's huge sell imbalances on DFS at the close. DFX actually did gap down a little bit. I did buy the close, and then I was able to flip it out after hours for some money. I flipped it out before obviously the Moody stuff came in and everything was tanked, so which was good too. So yeah, no, so it was good. Those risk arbs are all over that too. I mean, that's something we're going to talk about in our presentation as well too. There's just a relationship there. The ratio is 1.0192. The merger's going off the board. So, when you're quickly doing the math, the COF price times 1.0192 has to equal the DFS price. For it was about 60 cents out at the close. So there was a little bit of money to be made there. Not like dollars and dollars and dollars, but 60 cents isn't nothing. So it was a little bit out at the close.
in coin, I can't remember. Did you catch that short off the close, or was that Thursday that you were playing that trick? Because coin's having a little bit of
I
hangover.
traded coin, I believe it was Friday at the close. I shorted because I saw sometimes, I shorten the strength, and that worked out really well. Obviously, would have worked out a lot more if I still had the short, but I'd covered it before the Moody's thing as well. There was actually about 30 minutes of trade before the Moody's harpooned the whole market. So yeah, so I actually did short the coin close. Sometimes those things that are going in are fades, and it did pull back $2 almost instantly. Now it's down to 8. So I mean, but let's do some technicals here. Like let's go to Coinbase here, because I think this is going to be where we're setting up. We don't have a lot of earnings. We're going to do some preview on earnings here in just a few minutes, but I want to go more to looking at some of these technicals on some of the big widely followed stocks, because we're getting some significant dips here today. And I want to know if Joel Elconin is buy.
I don't have. I mean, no, you stopped well above the pre-market low here. So I'll just use that. 54.64 is your pre-market low. That's only $4 away. So you just got to look at two levels. That's the low from yesterday, Friday, 48.83. And then people, I'm sure, want to try and wiggle out at that close at 66.46. You have Bitcoin trading in the red here a little bit. Just if you want to try this immediate dip here, like I said, I wouldn't want to hang out much through that pre-market low. Also, it was like a lot of fluff in this. I mean, the initial 40, 50 points they tacked on because it was added to the S&P, and then you had the hack, right? And that brought it back down. Then people were made good on Friday. So you kind of had a second chance if you got caught in this little downdraft. So that's what you're looking at there. Resistance. I'm sure a lot of people would like to sell that close today. Just real quick, going back to sports, journalism did win the Preakness. It was a great come from behind race. I went with the long shot that finished up the track. Personally, I would have rather seen that long shot win and beat journalism because that would have been a nice juicy perfecta. I did a wheel. So I cashed. The perfecta was
What
only
the hell is a
35
wheel?
bucks. What?
What the hell is a wheel?
When you wheel a horse,
Yeah, you did a wheel. I don't know what that means. I'm
you
not a
take
horse
them
better.
you take them with like you take journalism with every other horse in the field.
So you just like basically hedging yourself? Is it a wheel on a
Yeah,
hedge?
and then I did it. Actually, it was a key box. So if that horse was 15 to 1, if that horse would have hung on, that would have been like $150, $160 exacta, and that would have been some coin. But the fact that journalism won, and still just a quick bet, journalism was going off to 8 to 5, right? That pays nothing. So if you go and try and get the exacta paid 33 bucks. So that's 16 to 1. That's much better money to me. But anyways, we'll see. I haven't talked about the Belmont yet. I haven't even looked at the Belmont yet. Okay, we got distracted here.
Yeah,
Uh,
back to technicals. I kind of want to go through the Mag
which
7 here
ones?
because I want to go through all the main ones because, sometimes we should almost do this once a week. Just taking you, Joel Elconin, our technical analyst, through the Mag 7 to break down the technicals because we know we've been talking about dips to buy, trying to find dips to buy, and they've been few and far between in the last week or two. But, let's start with Apple here because it's one that didn't participate. And when the stocks were obviously, moving higher, really in the last week or so, it's really gone nowhere. Obviously, Qs are up substantially. You've got a lot of stocks like Tesla's have been rampant, but Apple's gone nowhere for 5 days. Now we dip here a little bit. Talk to me about the technicals on AAPL.
Uh, too much overhang on this stock. I mean, there's permanent overhang with the tariffs, and this guy wrote a book about the relation. I mean, the guy wrote a book. I see it. He's basically blaming Apple for everything with China and trade relations. So I don't know. I mean, until this gets the gets resolved. I mean, you can look at 206.75. It did blast her, man, Dennis. You might have wanted to be up at 4 in the morning. Where'd they take this to? Where was that print? 206 even. I just and this is going to apply to a lot of stocks. When you have a big gap like that, I mean, I don't know if this is getting back down to 200, 20054 to fill the gap, but I just don't like this air in here. It just, it's not going to go take this low out. So, this is the low. It goes to the gap area. If you never think that's filling the gap, you bid at 206.75, and then you look at to fill the gap real close at 209.77. Microsoft, finally a pullback here. You haven't even taken out Friday's low, holding up pretty good on relative strength. So if you feel like you have to own this one, Friday's low, 48.73. What other ones you want to look
I
at,
feel
Dennis?
like, so I'm going to stop and go back to Apple for a second. I just bought some Apple here in the pre-market just right now because I feel like this stock wasn't participating, not for a long-term investment, just for a trade, because I feel like this stock wasn't participating on the way up the last 5 days. Why the hell should they hammer it more on the way down? Like this is also, a credit issue like here, like with Moody's. And, I still don't totally understand why staples and stuff are stronger here. But I mean, if I'm going with this theme that Apple has kind of not participated the last 5 days going up, why the hell are they hammering it the more on the way down here? So I kind of think that Apple could actually show a little bit of relative strength to SPY here today, because if you're going to hammer, all the other ones as hard, they're going to want to buy something. And I think it's logical that they buy, like Tesla's down 4%, Meta's down 2%, Amazon's down 2%. A lot of these Mag 7 are down way, way more than the overall market. So than the SPY. So if they're going to buy something, why not Apple? That's what I say, just for today.
Yeah, it doesn't. It kind of feels from like at least way the S&Ps are acting for now, that like like the day's over. Like 58.92.75. If you wanted to be in there, I mean, if you caught something short, there was absolutely no reason, unless you're a total hater and fader. That we closed at the highs for the week. We were looking good. Um, Boom, and then you get the Moody's thing. So I mean, things have changed. I mean, we still have tariffs, we still have everything. So if you just rolled the dice and took things short. I mean, this is a pretty nice discount to where we were trading at Friday on the close. So down 65 and a half
I do
handles.
think there's money managers that are going to buy the dips too on stuff here. So I kind of am looking, and I may be dead wrong. Maybe this fall through, we got to think about where we were going. But I kind of feel like we could get an early morning reversal here, where some of these stocks are down 4% here in the pre-market, like a Tesla. The dip gets bought, you get a little reversal, and the staples that are way up come in, because I still think like this is not like a tariff thing. This is not like a Trump thing. This is a Moody's credit thing, and I think it should be like all stock. Like with TLT down as much as it is, I'm surprised it's not all stocks like US getting hit, like kind of equally. And why is tech worse? Because they were bid up more? Yeah, because they're higher beta? Maybe. But is Apple higher beta? I don't think so. That's why I was like, I'm picking on Apple a little bit this morning. Maybe I'll be wrong, but I just took a shot. Day trade overnight, you can try anything. I'm gonna try it here today. A little bit from the long side.
I
See if
mean,
we
there's
don't
always like a
get some
little
strength at
sympathetic
the open.
pop, I mean, it seems, that when you're this far off the low, 18 handles off the low, I don't know. It just seems, I don't know. It's not unreasonable, I think, for things to come back to at least the bottom of the previous day's range. Or, I mean, you never know. You might see scratches some of these stocks. People get, as Dennis would say, antsy in their pantsy. You never know. Tesla has a little bit less. I mean, that's only $6 away from the bottom of yesterday's range. So, uh, Meta. I mean, these have been some big rallies here, folks. So, we'll be careful off the open, but seems like a lot of the heavy selling's done. Uh, Dennis, does the earnings season really ever end? Doesn't it
No,
seem?
never ends now. They just spread it out through the whole thing. They just want earnings all the time. And you can think this week, okay, well, today's quiet. And you think, oh, it's a nice little quiet day, not much going on. That's true. Today is quiet. Tomorrow, we're going to get started. We have retail earnings season coming, but we have even more than retail earnings season. We have cloud earnings season coming too. I don't know why they do all the cloud names at the end, but they do. But cybersecurity as well. So Tuesday, just quickly, and I don't know if we have a calendar to show, but we can just go through Tuesday. Palo Alto Networks, huge stock to report. Home Depot, huge at retail. Toll Brothers, Keys is also going to report here too. So you're kind of getting started. But then Wednesday and Thursday are huge days. So Wednesday, just giving you the highlights. Snowflake. You're going to get Baidu. You're going to get Lowe's, Target, Zoom Video, Elf Beauty, Best Buy, Williams Sonova, TJX. Some big names there, Medtronic. And then Thursday's huge names as well. Workday, Ross Stores, Deckers, Intuit, Dollar Tree, Autodesk, ADI, BJ, Burlington, ADI. You got some names here. This is not going to be like the quietest week for earnings ever here. So Wednesday, Thursday, really strong. Kicking off with Palo Alto Networks on Tuesday. Maybe quick preview, Joel, for PANW, because here's another stock that has come back a long ways. I mean, every tech stock kind of looks the same. They've all bounced back almost the entire losses from April. Just an incredible 5-week run here for stocks. Give us some technicals on PANW.
I'll tell you right now, this is just sticking out like a sore thumb. This got to hold 189.50, 190. They've been buying it all week last week, so it's showing good relative strength. Still above Friday's low. Man, if you think this thing is a buy on the dip right there, you have a good level. Play it a little bit close to the belt, because I don't see anything below this area. If you lose this area, the next daily low was 184.84. So right now, showing relative strength, coming back on the upside. This one, $2 away, or well, it's still above Friday's low, as I mentioned. 92.98 is the close. That was actually a double close, 92.98 and 92.90. So if you want to sneak out there at 192.95, I don't blame you here if you're trying to buy the dip off the open. What were any other, Dennis? You just ripped off a lot of them. I'll just go to Home Depot. Still don't know how they make all that money. I mean, everything in there. Whenever I go in, I spend like 482 or like 1170. Maybe a big purchase is like 50, $60 or something. But good resistance here, down 378. You got people trying to wiggle out here. Let's just call it the 380 area. So if you get it pop back up to that, dip buyers, lower nothing in here. Last two lows. If you take out discount Friday's low at 78.15, you got a little bit of a drop to 371.
Continuing on, we can look at a couple more previews on these earnings, but I just want to interrupt. Like over the weekend too, which we didn't mention, was interesting Donald Trump feeds from Truth Social talking about wanting Walmart to eat the tariffs. So he's so in tune with everything that is being said in the media, like just so in tune, where they're obviously, the administration is sitting here watching the media, because the Walmart, we talked about this last week, the Walmart CFO coming on CNBC and saying, we cannot absorb all these tariffs and we're going to have to raise prices. And you're going to see that end of May, June. Trump has come out on Truth Social and said Walmart needs to absorb this and eat those tariffs. So not raise prices. So tariff the hell out of them and then, eat the tariffs too. I mean, so price controls basically is what he's talking about here. Forget about freedom here for a second, but that's another story. That's another story. But I mean, I don't understand how Walmart can do it. Like, you just expect, he said Walmart's made enough money, and I don't have the True Social post, but I did read it on the weekend, so I'm forgetting it. But basically just saying Walmart made lots and lots of money. They don't need to make this much money, and they can eat these tariffs. Shareholders would probably say otherwise. So, not surprising, Walmart is really, getting hit harder than the staples today. And that is the reason. So if you're wondering why Walmart is down so much, it's because Trump told them to eat the tariffs on True Social. So that's why Walmart's down 1.7%. I want to do the technicals on Walmart just quickly, because we have a big sell-off on earnings.
I will. And then our chat's making enough comments about this for political, and I don't make political comments. You haven't even taken out Friday's low at 96 even. Okay? So there you go. You want to buy 96? Pre-market low 96. There's your level. If you want to try and wiggle out, the close is 98.24. But you know what I would do if I was the CEO of Walmart? And Scott Besson called me.
Yeah.
I'd be like, Mr. Besson, how you doing today? And he goes, we eat tariffs. I'd be like, okay, wink, wink. Yes, Mr. Besson, whatever you say, we'll eat those tariffs. Yeah, or part of the tariffs. Yes, thank you. Have a good day, Mr. Besson. And then it'd be like, what's that joker doing calling me, telling me how to run my company? That's what I would
flat out lie to Besson.
I flat out lie to Besson. If he called me, I would flat out lie to him. I'm being honest.
Let's find out what Tommy Lackey would do. We're going to bring in Tommy Lackey here a minute and a half early. He's
no pressure. Background.
Yeah, no, actually, Tommy gets his technicals, though, so we're going to bring him in for our Technical Monday. We're breaking him down. Let's get him in here. He's ready to go here.
There he is. Tommy Lackey, GT Lackey Jr., founding partner and CIO at Relativity Capital Advisors, husband, dad, and Motorhead. Okay, with you going with the Motorhead in there, have I ever asked you what your favorite car is?
No, but that'd be a hard answer for me, because I love just a ton of different old muscle cars, trucks, things like that. So again, if you ask my wife, it's whichever one is not in our garage at the moment and I see on some kind of a sale somewhere. So that's the problem, is I want a million projects and no time to finish them all.
You know what? I've always liked the Corvette. I've always liked, yep. And the new ones, man, look slick. And I remember when I was high school, I used to tell girls that I had a Vet, but it was really a Chevette.
Oh, yeah.
You remember those?
Yeah. With a big Corvette guy. And that's kind of what I grew up with, the idea of, that would always be the dream car to have. I don't have one right now, but it's still on the list of things to acquire eventually.
Okay, let's get technical. Dennis was asking me about a bunch of technical levels, and like we had a gap up the other day. I think there's a lot of air in here. We know the buy the dippers are lurking out there. I don't know if you want me to run the charts or you want to try and run the charts, but let's go broad here for a second. And what's your favorite index?
All right, I'll run through mine real quick, and then you can take
Excellent.
over whenever you're tired of them. So let me get in here and share the screen the way I was looking at just a minute ago.
Oh, by the way, do you like my tie?
I love your tie.
I did it just for you, Tommy.
I am so glad you're wearing it and not me. So that is much better that way. But yes, I mean, basically, I think I just shared my screen. Do I get to choose it, or do y'all choose it?
No, we'll bring it up. I got it for you right here. It's coming up. No, that's Joel's. We got to remove Joel's. Now we're adding yours.
But as this comes up, this is one that if you followed me for years, and I've showed on y'all's thing for over a decade now, is that basically this is what I call my triple play chart, which is the SPYs, the QQQ, and the IWM. It gives us a lot of different views of kind of where they're all sitting, which is all in different places. But one thing I use them a lot for is confirmation, non-confirmation, that if one or two of them is kind of diverging from the other, or if there is one that's like, especially a lot of times at bottom, since you talked about it earlier, and we know it's the reality that we live in, is technology is where the favorites are. And that's where people are going to go bargain hunting first, almost always. Well, one thing you'll find a lot is that bigger bottoms, not always, but you'll see the NASDAQ 100 or the comp diverge. It'll be the only one that doesn't make a new low, or it has a much more, the support holds a little bit better and people start buying it a little bit earlier in some of these different lows. And those are some things I've watched over the years. So I like to watch all three of these on a regular basis. This is what I'll post a lot on Twitter and StockTwits or X or whatever we call it these days. But it's really just a gauge of kind of where we are right now from a daily, or, you know, I'll break it all the way down into different. And again, it's a lot, but it gives us the opportunity to look at them all right next to each other. And again, intraday, I love doing that to kind of see if I'm getting some movement or some separation. But from where we are in this particular market, Brian Shannon taught me a long time ago to use the 65-minute chart to kind of equal out your days. And in doing that, basically, we're in a situation to where these markets have been on a pretty hard run for quite a while. So the idea of us pulling back some should really not be something that anybody's getting really uptight about. Now, at the same time, if we go back to not these dailies, but I'm going to switch all the way to the weekly level, this run off the lows, if you look down here at my RSI charts, the S&P 500 is first. The Qs are in the middle and the IWM's on the right. It's been our laggard, of course. And in looking at this, these RSIs all broke into bear ranges on the pullback. Obviously, we can call it a bear market. We can call it a pullback, a correction, whatever. I still think it's a correction in our larger trend at this point. And in doing that, that's kind of been proven over the last few weeks. At the lows, of course, we were all worried. There was a lot of stuff to be worried about. And most of the breadth had gotten pretty sour, and we were hearing about it every day. But at the same time, as y'all know from me using breadth for a long time, washout levels are always worth playing and watching, and especially as strong as our trend had been up until then. The tariffs, the news-driven, the things like that jumped in there exacerbated it, but we've talked a long time about velocity. And the velocity just keeps increasing every year in both directions. So I don't really call it a V anymore for a V bottom. It's just velocity. And we have to be more prepared for it than we were in decades past due to the way trading is done today.
That's a great point. I mean, it's just so much faster than it used to be. And, you know, things turn and we're so algorithmically driven that, you know, once the momentum turns, it's violent in both directions here. So it's just a great point that you're making, Tommy. So how do you approach? Like, let's just take a step back here and just look overall markets here. Like we've had this V turn here, but we've come so far so fast. I mean, I struggle with my swing trading, looking at this and saying, yeah, the momentum's on my side, but we're up 15% in 5 weeks here. Can we just continue and break out to new all-time highs? I mean, how do you trade a market that's come so far so fast? But you're scared to fight that momentum as well. Tell me how Tommy Lackey approaches this.
Well, I look at it from a couple standpoints on what you're trying to put your money back in and what you're looking for. If you're looking for trading this for the through the end of the year, then I think you got some great opportunities to just buy in, leave some long, some pretty loose stops on and see where you get, because we did get quite a few really good names come off those highs really hard. And in a manner that almost a lot of people just didn't feel it for the first few weeks, first month, all of that. And then all of a sudden it hit like a storm on Liberation Day, and let people talk about it being like COVID. That should tell you even more so it wasn't going to last. Again, you get that kind of velocity. We always joke about the rubber band stretching, but it really is true. When something gets so far out, reflexivity will bring it back to a certain level. I think we've surpassed that point at this point, but the last leg, you can almost always guarantee to retrace on the next move up. When you get that kind of just straight washout type action like we got, we look for it. It was a great place to buy some stuff. Now you are in a much tougher position. I don't think I would be running out buying a ton this week. I sold some last week on shorter term things, and then I'm watching how this goes to see if this pullback is going to be a little bigger. But let's be realistic. It could go halfway back and it could still be in a pretty strong market depending on how the activity happens in the middle. We had so much from the Mag 7 and those kind of things that took a lot of the legs out of the indexes there at the very end, while some of the other smaller companies and the RSP and all that were holding up a little better. That's one of your divergences you can kind of look for. And now the breadth has gone from being super washed out and weak to pretty darn strong. So that may be what you look for, is that, okay, maybe the Mag 7 and some of those really big guys do still get some safety money. But if these markets do really start finding their footing and there is some belief that this tariff stuff is going to work out better than worst case scenario, which is what markets like to react on, then you're going to see the broader market kind of fill in some of those gaps, which I think unsuccessfully many of us have been thinking about and saying, I'm not necessarily saying small caps are going to come back and lead the world, because I just don't think they have the funding for that anymore. But let's be honest, there are definitely opportunities there when you get these kind of stretches. We talk about the alligator mouth when you look at the different returns in small caps versus the mega caps over the last decade. I think funding is part of that, but I think also part of that is just the stretch we've been in. So while we may not ever get a recovery in small caps, I think smaller, large caps and mid caps could certainly be a great place to be paying attention to.
Tommy, let's talk rates for a second here. We got the Moody's downgrade. I mean, yeah, we got a lot of debt. That's a breaking news thing. But a lot of concern, a lot of talk about the TLT, interest rates. We don't know, inflation. We got some good inflation data last week, folks. What's everyone in a tizzy about here? Talk about rates and TLT here, and short-term, long-term ramification for U.S. borrowers.
Yeah, I just flipped my chart, and for some reason it's not flipping on y'all's. I'm not sure why it's not catching up. I flipped it over to a TLT chart, to a different. Let me see if I can fix that. Maybe
Is it
I'll
on
remove it and re-add you. We'll
Okay.
try to re-add it.
No, I must have chosen the wrong window.
That's okay.
Okay, do you want to re-add? Yeah, we can fix that. So we'll remove
Let me
it.
re-add and see if I can make sure. Somehow I did it the wrong way. But in doing that, the TLT, I think, is at a position to where y'all made the comment earlier about it needing to, for some reason it's doing it chart by chart. So I'll leave it here on the TLT. We're right near those lows. We got to see if we're going to break those lows. And it's certainly not a chart that anybody wants to look at. It is one of those areas where I think
that's okay.
The ugly.
Well, I don't like that one.
I don't look at that chart.
But I
everything's
think
going well. Don't look at that TLT chart.
You really need to hang on and see how those lows hold from October 23. Whether they do or not, the potential support. It's not anything right now, but we're so close to it to be making dramatic views on where rates are going or not until that gets taken out. I think it's just a little bit short-sighted. I think that whether we get interest rates down or not, the whole tariff talk or not, I think a lot of that is still very much in the what markets do, worried 6 months out kind of stage, because all the news is right here with us at the moment. But I just think, yes, it's a worry, but I think they may go back up to 5 and all of that. I don't know that we're going to see them spike to 8, like I heard someone say last week about interest rates at 8%. Maybe I'm wrong and we have to react to that, but I just don't see that here right now. I don't think the Fed's going to go that far. I mean, I think half the reason they're not lowering now is because they're just pissed at Donald Trump for the comments he makes, which sometimes you can understand that. But at the same time, I think that there's more to what they're trying to do, I believe, on the political and fiscal side than we're seeing yet. And while I don't like tariffs, and heard y'all talk about Walmart, I have to ask the same about all these large corporations that I ask about the federal government is yeah, they might have a 4% margin, but how bloated is their middle management? Because that's just considered expenses. So this is, I mean, it's a shell game we're playing with all this, whether these companies are making money or not making money or whatever. I knew a guy who used to be the purchaser for Walmart's stuff for years for their corporate side. And let me tell you how bad they beat up their suppliers every single day to make sure that they didn't pay any penny higher. And they would force them to do stuff that was just crazy just to be able to be in Walmart. So I don't want to hear much about, and until we can go through, just like they're trying to in our federal government, go through all these corporations and say, do you really have 80% more middle management than you need? Because your margins would be a heck of a lot higher if you got rid of all these fools that aren't doing anything. So I think there's more to it on all levels, just nobody wants to talk about it.
All right, Tommy, let me just touch on a couple individual issues that you've been tracking before we let you go here. And I know the stock might be watching paint dry, but what's your setup here, Sherwin-Williams?
Sherwin-Williams is one I really liked. And I'm going to let you pull up the chart because it's easier for you to switch from chart to chart.
Sure.
Mine's for some reason is sticking. But Sherwin-Williams, I just like the way it was consolidating there on that top right chart. And just basically it's in an opportunity now to where, housing's kind of out of favor, been for a while. And it's in an opportunity now to where if it can break out of this consolidation, it could move. And again, it goes back to that's what I'm looking for now is I'm looking for charts that have come off the lows well and either have already moved sideways or starting to move sideways. And I don't care if it's something like this that's been doing it for weeks, or if you go to the daily charts and you're looking at some of these that I've seen 3 or 4 of them I have in my watch list that are like 4-day tights and things like that to where, they ran 70%. But in the last 4 or 5 days, they've gone sideways in like a 4% range for 4 or 5 days. That is a high and tight pattern. That's not a bearish pattern. And even if it is, darn quickly when you're wrong. So things like that are where these markets, as it shapes up, I wish I could think of one of them right this second. I always come on here with you guys. I have these wonderful ideas in the back of my head, and they just don't ever want to come to the front of my head. Oh, here's a perfect example.
That's my problem.
And it's a little bitty stock. It's one that's going to be very dangerous. I'm going to just go ahead and say this straight out because it's only a $1 billion company. But look at PRCH on the daily.
Porch Group. Wow.
Oh.
Those are big moves too.
I mean, huge move, low price stock. So you got, again, there are factors you've got to worry about with position sizing and stop loss and all that. But why can't you just put a stop loss a little bit below, put it 2-3% below that, maybe 5%, even if you have a small position, but below that little pattern right there. And then basically once it moves out the top, ride it as long as it wants to. I just finished a book, the Tom Hogarth book, The Best Loser Wins. Really good book talking about day trader, kind of talking about kind of that idea. And that's one of the things he said that he had to retrain himself was to not doubt the market. And we all do that. We all say, this run's about to end. It's about to end. We're too late. We're too late. And then it just keeps kicking us in the face. Yeah. And this is where he said, he had to trust himself and trust his work. And then when the market told him it was time to get out, I've been in this business a long time, and that's a daily struggle to try to figure out, okay, where do I want to get in? And the reality is, like Brian Shannon always says, is don't buy the weakness, buy after the weakness. Yeah. And I think that's exactly where some of this is coming in. This is a huge move off the lows, no doubt. But at the same time, it seems to keep beating earnings here recently. And that's a tight pattern that's after earnings. and just looks very solid to me.
How about another lower price stock here? We don't talk about much. Ericsson off the lows, Stealth off the lows, just kind of consolidating down a few pennies here. I see the resistance. Talk about Ericsson.
Well, see, again, this one's kind of loose, and that's the only problem I see with it. But at the same time, it's not going to be the fastest mover. So with something like this, it's a little more loose. You could find you a level down there. Again, you're not going to do these with 2% stops. You're not going to do an $8 stock with 2% stops in this market. You can, I can't. I'm not that good. I mean, I'm like very basic and very to where I got to give it a little room, take a smaller position side and give it some time to go. But this, like here, if you look at that weekly chart, I mean, it is just like if it comes out of this level, bam, and look at all the volume that we've seen in, and you know, you don't have volume on the bottom of that one, but for those listening, look at all the volume you've seen in this last few months, accumulation volume coming off these lows. So, you know, I think there's an opportunity here. And again, this is a $28 billion company. This is not a small endeavor. This is one of those to where if you don't like my $1.1 billion $8 company, here's you an $8 company that's $28 billion and obviously has a pretty big business behind it. You're just still playing the chart, though, here.
Okay, one more for you. PCTY. Paylocity Holding Corporation, kind of bunching up again. The consolidation near the highs of the move.
Yeah, I mean, you can see what I like. Again, look at that daily pattern. It came right above that little inverse head and shoulders, popped out of it, broke out. They tried to sell it back under it, and it can't go into the neckline. And it's gone across 5 days in a row or 4 days in a row after that pop, closing with an accumulation day on Friday at the high close of the move. I mean, like y'all said, with the Moody's downgrade and some of the other news, we closed Friday in a great position on the markets with good buying. People bought into the weekend as opposed to selling off. All these things had good vibes behind them. So who knows what'll happen today. But when you look at a pattern like this, I would be watching this pattern to see if it can keep moving. And I mean, this is one of those that could easily shoot to those highs up around 216. And then from there, decide where it wants to go. And again, I'm not a person with targets. I'm one for milestones to where a 216 is just a milestone. If I can get a breakout here, I can write it up there with some cushion and then give it some time to break out from there if it wants to.
Okay, you know who he is. He's Tommy Lackey, GT Lackey Jr., CMT on Twitter. He's a CIO, Relativity. Why can't I say that? Capital Advisors. Go check him out at relativitycap.com. Tommy, great way to start the week with your calm, cool, and collected demeanor. And we'll be dialing you up again real soon. Thanks, Tommy.
I look forward to it, guys. Thanks as always. Great day.
Thanks, Tommy.
Okay, creeper rally here, coming back. Dennis,
defensive names holding up very well. So you got rotations holding up this market. Burke.B barely down at all. So you got the value trade holding up here too. I still wonder if this trade doesn't reverse. So, I mean, with the TLT down, if you just like closed your eyes and said the TLT was going to drop 2% and they were going to buy all these defensive stocks on that, you'd say, what the hell are you talking about? That's kind of what we have this morning because it's automatic. The algos just flock to defensive names when the S&Ps drop. But this is a drop for different reasons here. And that's why I would not be surprised if tech actually gets bought and we see this trade reverse. Right now, tech is hammered and we're buying all these defensive value names. TLT down as much as it is, I'm looking for that trade to reverse after the open when the real money comes in. I mean, it's a weekend. You know, money managers get into the desk. I think they're going to start to think logically and beat out the algos here. So that's what I'm positioning is actually shorting more value names here right now and buying more tech names this morning. Maybe wrong. You know, this is what we do. We take shots. I want to see immediate gratification on this after the open, though. So obviously, if you're on the STN room, you'll be trading along with us and find out how it goes. But that's the way I'm positioning myself.
Okay, we've already got through 3 fat heads. I don't know. We had one at 8:30, Bostic. We had Jefferson at 8:45, Williams at 8:45 as well. Logan at 1:15, and Kashkari at 1:30.
All today?
That's today.
Oh my gosh.
Yeah.
Okay, so that's always can move markets too. So you got to listen to the Fed speak, and you also got to think the Trumpster is probably getting itchy to start tweeting something again here too. I don't know if he's been going here yet, but we know he'll see the markets down and be like, "Deals are coming. We got deals coming." He'll want to pump the markets back up. So you have Trump on your side too. Lots of reasons to think that the dip in tech could get bought.
Tomorrow, Barkin, Bostic, Collins, Musalam, and Kugler. That's tomorrow. 1, 2, 3, 4, 5.
We're gonna know
Kind of
everything
light.
about the Fed.
Yep, kind of light on economic data. Going, jobless claims. Barkin speaks later. Cook on Friday. Um, S&P PMI flash, not a big mover. That's your econ data rounding out the week. Also, folks, keep this in mind. Well, the Indy 500 is Saturday, but we got Memorial Day weekend coming up. So we got a 3-day weekend for us, and so the options. Think about that when you're trading for the week and you're trading the weeklies or next week's options. Just know that they're gonna take a little chunk out of you for that day off on Monday. Uh, we do have some ratings,
Yeah, we do.
and Wells Fargo. Second Reddit here. So let's take a look at, I believe,
Yeah.
a downgrade
Wells Fargo
here.
downgrades Reddit to equal weight, saying search traffic changes likely to become permanent. So they're worried about search as well. And again, this is one reason I've been worried about Google for a long time. But Reddit analysts, I'm just reading some from the note, Reddit user issues now likely more permanent. Prepare for logged out user declines as Google more aggressively implements AI features in search. So they're saying Reddit as a loser here. The stock, this is one that has not rebounded whatsoever. If you're looking for stocks that have not come back, this is the one. This was $230 in February. It's $105. It's not even that far from the April lows. They were down at 79, but I mean, so many stocks have got back all those losses, and this is not. So just keep that in mind here. This has been a real relatively weak stock. And I think maybe the analyst, maybe some of this makes sense what they're talking about here.
Well, if you were along with the buyers back on May 8th and 9th at the 105 area, well, here you are. Your next daily low comes in at 102.80. I don't know how big of an axe here Wells Fargo's carry with their ratings, but nonetheless, the market is responding to it. Probably the more high profile rating of the day here. Netflix, that's trading down $17.50. I believe one of the big boys. Yep. Woo. JP Morgan downgrades Netflix and neutral. Price target 12.20. Well, it didn't hit 12.20. Actually made a new all-time high on Friday. Are you shrugging off the JP Morgan downgrade in this relentless stock known as Netflix?
It's just been the place to hide, and the stock made a new all-time high again on Friday. Its valuation is stretched here now, and we always talk about valuation, to a certain extent. Like obviously in trading it doesn't matter, but with investing it does. And I mean, people have been hiding here because we've been saying it's tariff proof, and I had the one day that pros show like it wasn't. But I mean, I bought this back at $190 like a few years ago, and it was trading 16 times earnings. I was like, this is the cheapest Netflix ever been. It's now 56 times earnings, 48 on a forward basis. So now it's really expensive again. So I think at this point in time, I got to just say, the Netflix run has been incredible for the last 3 or 4 years, but this is definitely stretched now. Are they operating and firing on all cylinders? They have been for a very long time. They've been best in breed for streaming for a long time. But I mean, now you're looking at the stocks up, 500% in a matter of 3 years. I think at this point in time, if you're looking at Netflix, as oh yeah, this is where I want to be, I think you're way late to the party.
Okay, yeah, nice new all-time high on Friday. Where are we looking at the short-term technicals? Boom, got a waste. I mean, if you're looking to wiggle out at the highest low it's ever made, that's 1179.39. You're gonna need a pretty good rip roaring rally to get back to see that all-time closing high at 1191.53. We do have some other ratings. You guys could cover that in the STN room. I saw some people talking about space today, and Space lost some faith. It was ripping, it was roaring, and it sold off pretty good. I would keep an eye on that close at 494. If it doesn't hold that, I don't know how much it's going to leak, but you got some people caught in this thing. They thought, oh, 6.5, 7, 7.5. So keep an eye on the close there for space. Dennis, 8:59. I know you're trying to wiggle out of some things here this morning. Any closing comments?
Well, just again, same thing I've been saying all morning. I'm very surprised that they're buying those dividend plays on a day the TLT is down 2%. So I do look for that trade to reverse. I'm going to stick with that.
Okay. I'm looking. I'll be looking to head downtown here in a little bit. But
yeah. So join us. We will post the link once we have that up. I will tweet it out for our 10:30 to 11:30 presentation. So if you're interested in watching, and learning a little bit about short term, like I'm going to teach about a little bit of high frequency trading as well. So if you've always wondered what that is, I'm going to kind of go into depth on some of that stuff. So hope you can join us 10:30. I will tweet it out. I'm at Triple D Trader. So yeah, join us, and if not at the STN room, we'll have it live in there as well.
Yeah, Michael Houston joining us from across the pond. I know a lot of you guys have been asking when he's going to come in. Former CMC Markets executive. He'll be joining us here on Pre-Market Prep. Way to go today, guys. Thank you, Brentster, always in the background, working things, helping us out. But you guys will, I'm going to do the tie up to the top, get the sport coat on. You guys will be seeing me in a little bit. Thanks for joining us on Pre-Market Prep.